Alright guys, welcome back for another video. In today's video I want to talk about the Bitcoin price action, the recent rally above the June 26th daily high right here, putting it at 22,000. Anytime you see this type of price behavior, that's an area of interest, and it's an area I want to keep an eye on because price can do different things on a break of that level. But it is the type of area where you want to set your alarms and set your notifications and be paying attention because a couple different things can happen. But first, I want to frame this in the context of the macro, and essentially, Bitcoin has taken out the prior weekly trading range, and that's significant because Bitcoin has not had an up close candle since March of this year. So that's about 4 months. That's probably the most brutal sell off in Bitcoin's history ever. And now there's the possibility that we see an up close candle and through that, a change in behavior. Of course, we haven't had the close yet. There will be the close at CME later this afternoon. Some people like to use that. But then also, of course, the traditional close Sunday. That's something to keep an eye on. If we do get a close above that level, that is a change of behavior relative to what we've seen for the past few months. Something to keep an eye on. And I want to frame that in the context of, where this level is on the macro. And essentially, this whole consolidation is a retest of the all-time high from the prior cycle. On Bitfinex, that's just under 20,000 and coming in December 2017. And, this is a level where people up in this consolidation that were maybe bullishly inclined, they would have felt very lucky to buy this level if price, the market traded down to this level. And of course, now that price is there, it's a little bit of a different perspective. That eagerness to buy is not so immediate, and there's a good degree of fear that price could go lower, which it could, but still it doesn't take away from the fact that this is a very unique opportunity coming in at this level. So let me just put the lines back on the chart. This may seem like there's a lot of lines here, but they are all significant levels, and I want to go into great detail about why they're significant and go through the rationale for each of those. But essentially here we've got the all-time high. You can see price paused here, coming up here. If we zoom in right here to the all-time high. So in 2020, before the breach, there was a retest of the all-time high. And maybe stop people out who had their stops just above the all-time high, grab liquidity, and then a little bit of a shakeout before the push up. That price pause created it, that's an area we would generally look at, and it's confluent with this area. So you have two areas of confluence. You also have areas of confluence with the momentum indicators. Really, the RSI is the reason I have RSI in the chart down here is just the weekly RSI is. You may have heard me say this before, but it's at the lowest read it's ever been at, which is, normally I don't pay too much attention to the RSI, but when the RSI does get, when it does hit extremes, for example, like up here where it exceeded the prior cycle RSI right here, and then down here when it exceeded the prior lows, that's an area that I want to pay attention to because usually these areas of extreme volatility offer extreme opportunity. So that's something confluent. Again, we don't see divergence, but it's just the extreme nature of the read that has me interested. Stochastics are kind of lining up with that. If we do see a response off this level, stochastics will naturally cross out of the critical zone, and that would probably be confluent with the RSI crossing up above the EMA right here. Again, that to be fair, that doesn't exist right now. It hasn't happened yet, but it's momentum indicators are just telling you the price is pretty beat up, which you don't really need them to see that. You can see that on the price chart. Now I want to go into the level, each individual level by themselves. This level here represents the prior weekly high. That's where we'll get the change of behavior if we get a close above there. Considering the dramatic nature of this pullback, if we do get a low here, I would imagine that the expansion would match the volatility of the drawdown, and that's because you get a short squeeze, short covering, and bear market rallies can be pretty violent at certain times. So now going down onto the daily chart, we can see the price is traded above. Here's the weekly level that we just pointed out. We'll just take that off the chart. Actually, we'll just leave that there. But you've got your prior daily high here, and this is an area worth paying attention to, especially in the low time frames. If we can go down here, so just to reframe this, we have the prior all-time high level here at 20,000. This is the prior weekly trading range high, and this is the prior daily swing high right here. So generally, this is when you see price going up and taking liquidity and then selling off like this. Generally, that's starting to create a swing failure pattern. If you were short from here, a lot of times you would want to take profit at this high right here. So mark that off. Generally, I've covered this in videos before, but a lot of times this area right here that created the base that pushed above the liquidity will offer a reaction, and you never know if price will just bounce off there and keep going. So this is a very important area to pay attention to within the context of this liquidity concept. But actually what we see here is we see price doesn't base off that level and comes down below these lows right here, and then of course sells off, rallies down here, sells into this extension. So and don't let these lines confuse you. They're not the 15-minute price chart lines. This is your prior weekly close. So I'll pull this off. Again, trading into the bias of seeing a weekly close above the prior weekly trading range, you would want to, in that scenario, you would see, well, you did see price trade down into this level right here. It bounced off this 15-minute level here. So if you see price rally off any of these areas of interest and then close above this weekly high right here, then you'll probably see continuation a little bit higher than these highs right here. Again, just a different way of looking at things and putting that back into context. We'll take this weekly high off right here, so it's a little less confusing and a little bit easier to see on the 4-hour. And assuming that that scenario does come to pass and this is a low essentially, then there are a couple of areas of interest higher up. This area would be the shelf. This would be the price pause. So this is an area where I'm always going to be looking to take profit, not necessarily frame an entry, but it offers a good take profit area and also a good area to manage risk afterwards. And by that I mean, I'm typically going to set a limit take profit order at these levels, and to reduce risk on an existing position as opposed to adding risk or opening a position. It's a very important distinction. But say I was long from down here and I took profit off here, then any intermediate time frame. So say, for example, price comes and trades right up to it and then sells off a little bit. Now that intermediate high on the right-hand time frame of the chart, that's going to be a very good level to use as a stop loss. And that's a little bit of a dynamic way to trade these levels. But the idea here is that, this area, typically called the shelf bottom or price pause bottom or top, whatever you want to call it, will offer resistance. But then if that resistance gets broken on the retest, saying it sells off and then runs through, well, now you have a lot of area of inefficiency above. And that's an area where, if price does make its way through, it's probably going to make its way through very aggressively and trade through in a fashion similar to the way that it sold through. A very important concept to keep in mind. And then also you have this price extension right here. So that's an area of interest. That would be also an area I'd be looking to take profit. Not necessarily open a position, just because if you look at this entire consolidation as support, or resistance, then price could trade to this price extension or this level I've identified, or this level, And really, the further it trades into the consolidation, the more it trades into premium, and the more it would be favorable to open a position. And by that I mean it, this area is very significant. I always use this as a take profit level. This area is important just because this is the area where, if you call it a point of origin, whatever you want to call it, this is the area where, for all intents and purposes, the consolidation breaks here. Sellers step into the market, offers hit the books, and price moves very, very aggressively, trading down essentially for the next $10,000 move. So that area where the bids hit the market, and typically it's an area where volume will start to pick up, which you see right here. See volume start to pick up. That's an area that I want to trade. But in this scenario, because that area is so close to the bottom side of the consolidation, it's not going to offer a very good opportunity to open a position. So I would use it more as an area to take profit. And also, of course, I want to mark off the high. Now, this is an area, a very significant area as well, but that's an area that I would frame more in the context of opening a position, just because, as price trades into this consolidation, the high, of course, is going to offer more premium. And sometimes, price will even run just above it and, stop people out. But essentially, those are the different levels that I'm looking at the chart. Really just represent, the different levels I would look at if price bottoms out at this level here, based on the retest of the all-time high, and makes its way higher towards this consolidation overhead. Again, things could get aggressive and move further than that, but as a trader, you just want to take things level by level, and those are the areas I'm looking at, and the areas I'm paying attention to when price trades at those levels. So if you do have alarms on TradingView, sometimes it helps to pick out which levels you're looking at and set the alarms there, and then just relax between during the times where price is not testing any of those levels. Anyway, I hope you guys like this video. If you guys like this content, make sure to like the video, subscribe to the channel, and I'll catch you guys in the next upload.